Lelo, I know you had a burning question.
Right. First, I need to congratulate the CEO of the PRC here for what they've done. I think it's extremely admirable that with 7%, and it's difficult to hold more of Anglo. It's a huge company. It's difficult to hold more. So with that amount which they hold, they'll be able to really represent most investors. We, for instance, have long thought that Anglo is a lot of risk and has very little value in it. And I think this has been vindicated. But the question that I want to ask is, isn't there a far deeper structural problem with Anglo? Because in the past, they had South African CEOs, South African executive managers and executives on the board. And Cynthia came in and got rid of them. And she put in a lot of quote-unquote Europeans and so on. They still couldn't fix the problem. She says she's going to optimize costs and improve mining techniques and so on and so forth. None of that has worked. It just leaves one to wonder, how do you fix this problem? Do you, when you think about it, do you analysts have a suggestion or two as to what Anglo could do structurally?
Our analysts have been looking at this for a while now. And yes, it does seem like there's a structural problem, but it is not clear what that structural problem is. And our view is that we need to sit down with the company to understand exactly what the turnaround strategy ought to be. We've had a number of meetings before our announcement, and we agreed to have further meetings going forward. And our further meetings going forward is because of the underlying interest that we have in making sure that the company turns around. It is not to the benefit of the PRC, nor the GPF, nor the country, if the company doesn't turn around. So there is a deep interest to help them to turn around. What the interventions are going to be, it's very clear, it's very difficult to say at this stage. But it would seem like there will be clarity before Christmas. We're going to have meetings before the year ends. And in the meetings that we had before the announcement, there were a number of proposals that were put on the table. And some of the proposals made sense, but the challenge is converting them into returns. And for us, we think that is where the challenge is, interrogating the turnaround strategy that they have proposed and making sure that it works.
As part of your proposals on a turnaround strategy, would you want to look in and say on who the replacement, the successor CEO might be? We've heard Minister Susan Shabangu saying she would like a South African in that position.
We wouldn't like to get to the extent of debating names. However, what we would like to do is to talk about the characteristic of the person who's going to take over. What we need to caution is that the person who takes over is going to be faced with exactly the same problems that Cynthia has left for. And as a result, in our mind, the person that we're thinking of is a person, one, who understands the mining industry very well. Secondly, somebody who understands the African and emerging markets very well. Somebody who can be able to amass a lot of inputs from various sources within the group to making sure that they steer it in a particular direction. And this person, I am sure, is not going to have a magic wand. He will have to work very hard with the people that he finds on the ground. But what is also key to us is that it is very likely that you can find that person amongst the emerging market countries. You are also likely to find that person within South Africa. And if we can get a South African to turn the institution around, it would be a very good positive, not only for the company, but for the country as well.
And when you look at Anglo American in particular, they bought assets in South America at the top of the cycle, and they wasted an enormous amount of money, and they passed their dividends that significantly damaged investors' view of Anglo American. But at the time, it wasn't easy to call the top of the cycle because things were just going absolutely wonderfully. Then when you look at, and they've had problems bringing those assets on stream in the very recent past. They've had production issues and logistical issues and all of these sort of things. If you look at Kumba Iron Ore, I mean, fundamentally that's a seriously good business and will be for a long time period. But in the very short term, 3-4 years, there's too much extra supply coming on stream. You turn to the diamond industry. I mean, they've just bought out the Oppenheimer family diamonds. I'm not massively positive about the longer-term structural outlook for diamonds. There's short-term issues because the walls collapsed at Jwaneng, but that's a short-term issue. I'm not too happy about diamonds per se. Come to platinum. Platinum's got a wonderful outlook. There's just short-term too much supply, which is coming off quickly, but too little demand, mainly because of Europe, but that will also recover. So structurally, Anglo's isn't in bad shape, but it's going through some short-term issues. When would you like to see sort of, what's your time scale to see some sort of turnaround in Anglo American's fortunes relative to other mining companies?
Very difficult to say, and I think because they've been lagging the rest of the industry, you would expect to see a doubling up in what they have to do. 2-3 years, I'm not sure if that is feasible. It depends on the strategy that you take. There has been a debate whether or not to sell off the less productive, the loss-making operations of Anglo. Part of the reason is because of the market down cycle. When the market turns around, those operations may turn from what they are into profitable entities, which is exactly what you've mentioned. And you may actually argue with hindsight that selling them off was actually a bad idea. And the other alternative is bringing in good management into those operations, sustain them through this rough patch, and prepare them for the upswing. And if you're able to manage them in that fashion and keep the group together, the likelihood is that if we do experience the upswing in the next year or two, the group is going to benefit from retaining the assets as opposed to selling them off. But this is anybody's guess as to what the best option is.
Elias, could I ask you a more general, perhaps a philosophical question, that would you as the PIC sometimes find it difficult to balance perhaps some of the pressures that you might be getting from the government through the Government Employees Pension Fund versus your position as an investor? So almost, it was not, if one can unfairly say, sort of the rational, cold-hearted capitalist view versus broader development objectives. Is it difficult for you as a middleman to balance those two?
Well, let me start off by saying there are no pressures. The PIC is let alone to operate based on a mandate given from clients, and the GPF being the largest of the clients, accounting for 90% of assets under management. Having said that, the mandate has a dual objective. On the one side, we need to meet certain benchmarks. We need to perform. We need to generate good return and sustain return over time. But at the same time, we are expected to contribute to economic growth and development. Now, you may say that how do these two things exist side by side? They do actually exist side by side, in the sense that there is a very close link between the performance of the assets that we manage and the macroeconomy. If the macroeconomy is not doing well, the likelihood is that the performance of the assets is going to be compromised. And this has been shown by the financial market crisis. And therefore, what it means is that all that we do on a day-to-day basis is making sure that we hit those two objectives on a continuous basis. When we invest for development, for improving the efficiency of the economy, for improving its absorptive capacity of labor.
Right. Hlelo, if you can ask and answer in 20 questions, minutes, seconds, the floor is yours.
Very provocatively, by the way, if I may say, what do you make of when people compare Billiton to Anglo American, that Billiton doesn't have the problems Anglo has in South Africa because it has left the country, and Anglo American has its problems because it has more of its assets in the country?
Well, Anglo has about 37% of its assets in South Africa. It makes 55% of its profits from South Africa. I don't know what you make of that. that basically means South Africa remains a very profitable decision for Anglo. If you choose to relocate out of South Africa, that means your profitability is going to be affected negatively. From that perspective, I think, yes, you may be comparing uncomparables, comparing the two, but when you look at the numbers,
Profitability.
it just makes sense for Anglo to be in South Africa.